Ladies and gentlemen, welcome to the Energy Development Corporation's earnings call on its first quarter 2016 financial and operating results. I will now turn over the floor to Mr. Erudito S. Ricio, Head of Investor Relations. Please go ahead.
Good afternoon, everyone, and welcome to EDC's conference call to discuss its first quarter 2016 financial and operating results. As a reminder, the financial and operating results presentation will be posted in the Investor Relations page of the company website shortly. We have likewise subscribed to a playback of this call for 30 days from our service provider, PGI. The corresponding passcodes will be made available upon request by all concerned from EDC Investor Relations. Before handing the floor over to the next speaker, I would like to remind everyone that comments made for the call's duration may include forward-looking statements that are based on current expectations and as such are subject to a variety of risks and uncertainties that could cause actual results to differ materially from current expectations. With me for today's call is our CFO, Mr. Nestor Vasay, Erwin O. Abante, VP for Corporate Finance, and myself. I will now turn over the floor to Mr. Vasay for a brief introduction.
Thanks very much, Boy. Good afternoon, everyone. In the first quarter of 2016, there are four major factors that affected the company's financial results. The first one is the post-curtailment output of Burgos Wind. This resulted to a higher reported revenues this quarter amounting to 670 million. Recall that the output of Burgos, as with the other wind farms in Ilocos Norte, was curtailed for the first 9 months of last year due to transmission line constraints downstream from Loag to San Esteban in Ilocos Sur. Second is the higher revenue contribution of Unified Leyte Power Plant. This is brought about by higher sales volume amounting to 220 million, combined with a 5% escalation of its tariff price, considering movement in the peso to the US dollar exchange rates. Third is the less than expected revenues of Bacman power plants. About 75% of Bacman's capacity are currently sold to the spot market, where trade prices are pressured by declining oil and coal prices. The reduction in tariff resulted in lower revenue contribution of Bacman plants, amounting to 260 million. And lastly is in relation to the arbitration proceedings between EDC's wholly owned subsidiary, Bacman Geothermal Inc., and its contractor, Weir Engineering Services Limited. EDC received proceeds from Weir on contract for works, completion of works to steam turbine and generator of units 1, 2, and 3, amounting to 210 million pesos, and reimbursement of legal fees amounting to 40 million pesos. Let me turn you over to my colleague Erwin to discuss the financial results in detail.
Thanks, Nestor. I'm on slide 6. Consolidated revenues reached 9.1 billion in the first quarter of 2016, which is up by about 0.6 billion or 7% from the 8.5 billion in the first quarter of 2015. As mentioned, the improvement was principally driven by higher revenue contributions from Burgos Wind by about 0.7 billion, followed by Unified Leyte and contributions from Palintinon Tongonan. Revenue results were, however, partially negated by lower spot prices. The increased revenues from plants with largely contracted capacities, namely Burgos, Unified Leyte, Palintinon Tongonan, were partly offset by lower reported revenues from plant capacities exposed to the spot market. These are Bacman, Nasulo Power Plant, and the UL IPPA strips. Inclusive of non-recurring items, consolidated net income attributable to equity holders of the parent stood at 3.25 billion, which is 31% higher than the 2.5 billion in 2015. The increase was primarily driven by higher revenues of about 0.6 billion, again mainly from Burgos, as well as higher forex gains amounting to about 0.5 billion, following the translation of the dollar-denominated loans, but partly offset by higher plant operating expenses. On slide 7, this summarizes the revenue movement for the different units. I'll just skip this slide and go through there are specific slides for each power plant that will also talk about revenues. But basically, as you can see here, all the units that are actually contracted recognized higher revenues compared to those with spot market exposure, which registered lower revenues because of lower spot prices in 2016 versus 2015. On slide 8, it summarizes the movement of the operating expenses for the first 3 months of 2016. The OPEX increased by about 5% or about 0.23 billion, mainly due to 3 items. The first one is increase of about 0.1 billion due to higher insurance and taxes. Industrial all-risk insurance premium for the steam field and the power plant increased, while local business taxes also increased mainly in Negros Island as well as in Leyte because of higher revenues. Non-cash OPEX also increased mainly due to higher depreciation and amortization of about 0.09 billion, primarily from the hookup of new wells in Leyte, Negros, Mindanao, and Bacman. Other drivers for the increase were due mainly on repairs and maintenance attributable to Burgos Wind, higher O&M. We're paying Vestas a variable fee based on the revenues, based on the kilowatt hours generated, as well as higher net cost of energy from the UL IPPA strip, and the repair of the bent rotor of Tongonan Unit 2. However, these were offset by the absence of drilling and workover wells in Q1 2016 versus the same quarter in 2015. Going to each power plant, on slide 9, it's on Unified Leyte. Revenue was up by about 210 million pesos due to higher net sales volume after eliminating the IPPA strip sales. Average tariff increased by 4% given the depreciation of the peso versus the US dollar. Recall that our revenues or our PPAs are partly indexed to the US dollar movement. The net income also increased by about 0.2 billion due to higher revenues and forex gain, despite higher OPEX, mainly due to higher O&M costs, insurance premium, and local business taxes. Slide 10 is on Tongonan. Revenue was up by 5% due to lower sales volume brought about by the Unit 3 plant outage from February 3 to April 4. But this was offset by lower OPEX amounting to about 0.02 billion, which brought up the net income by 3% from 0.42 billion to about 0.44 billion in first quarter 2016. Slide 11 is on Palinpinon. We recognized higher volume and higher tariff, and this resulted to higher revenues from 1.62 billion in the first quarter last year versus 1.78 billion in the same quarter this year. The net income was also up by about 200 million, again because of higher revenues, lower OPEX of about 100 million, and then this was offset partly by higher income tax, again because of the higher results of operations for Palinpinon. On slide 12 is Bacman. There was a significant decrease in revenues. This is about 27%. Again, mainly because of the tariff prices. Tariff average for the first quarter was 2.53 versus 4.77 during the same period last year. As you can see, about 80% of our revenues in Bacman are exposed to the spot market. We're still awaiting for the ERC approval on one of the contracts that we signed specifically with Meralco, which is not yet in effect as of the moment. This was, however, propped up by 37% increase in the sales volume, contributing about to the 0.35 billion. There's a lower OPEX also, slightly, of about 0.01 billion, and some other movements, leading to a lower net income for Bacman of about 180 million pesos. On slide 13 is about Mindanao. In terms of revenues, it was up. The tariff was up by about 5%, again because of the peso-dollar movement. The PPA is also indexed to US dollars. However, the net income decreased by about 32% due to higher OPEX, mainly due to O&M and depreciation of the new wells that were hooked up in Mindanao. On Nasulo is slide 14. The net income decreased by about 0.17 billion, and this is mainly driven by the lower revenues, because of lower tariff. Much of the kilowatt hours in Nasulo is actually exposed to the spot market. So average tariff went down from 4.37 pesos per kilowatt hour to about 2.65 pesos per kilowatt hour this quarter. On ULGI, that's on slide 15, the revenues dropped by about 0.02 billion due to lower tariff, from 4.02 to about 362 per kilowatt hour. But higher OPEX resulted to about 0.09 billion loss for ULGI, as the cost of energy strips that we pay for PISAM is more than the average selling price. Slide 16 is on FG Hydro. The net income from Pantabangan Masiway plant remained flat. A 7% increase in volume were offset by about 9% reduction in average tariff. If you look at the pie chart on the upper right, sales from the WESM and ancillary services accounted for about 21% and 43% of FG Hydro's total revenues, respectively. So net, I think if you look at in terms of sales, ancillary and contracted went up, but because of lower prices in the spot market, this negated the higher volume, leading to a lower revenue of about 0.03 billion. For Burgos, that's on slide 17, revenue was up by 0.67%, again because of the non-curtailment of the output in the first quarter of 2016 versus the same quarter last year. Recall that the curtailment of the San Esteban, the Lawag San Esteban line, was sold starting fourth quarter of 2015. Net income increased by about 0.67 billion. This was weighed down by the higher OPEX, mainly due to higher depreciation of the PPE and power plant O&M with Vestas, as well as higher real property taxes and insurance premium. Slide 18 is a little is a slide on solar. Revenues in the first quarter amounted to about 20 million, following the commercial operations of Burgos Solar 2 in that quarter. Slide 19 talks about the movement in the recurring net income. Consolidated RNI increased by about 6%, or about 0.16 billion this quarter. The movement is mainly due to higher Burgos Wind income and lower OPEX of Palimpinan Tongonan, leading to an RNIA of about 0.53 billion and 0.18 billion respectively. Movement in RNI is also attributable to higher income tax expense on the non-recurring income, amounting to 0.03 billion. higher forex gain amounting to about half a billion, and lower contributions from Bacman and Nasulo. In terms of cash flow on slide 20, cash generated from operations during the first quarter stood at 3.32 billion, and these were used primarily for debt service and maintenance capex for the quarter. Slide 21 is on the ratios. Current ratio was slightly lower due to the lower current assets, while debt to equity improved due to the settlement of the 8.5 billion peso bond, which matured in June 2015. Meanwhile, the net debt to EBITDA increased due to lower cash and cash equivalents this quarter versus last quarter. I'll turn you over to Boy Resio, who will be providing updates on some of our key initiatives.
Okay, thank you very much, Erwin, for your discussion of the company's first quarter 2016 financial results. For the slide on company updates, one notes that the dominant theme across all three company initiatives can be summarized as follows. Preservation of the base case. On equipment reliability and resiliency, we are currently at a stage wherein we are awaiting delivery of the long lead time items by our suppliers. EDC has programmed the installation of the different on-order items sometime in the middle of the second half of 2016. As of the moment, we are on track for the retrofit programs covering Tongonan, Upper Mahiao, and the Mindanao power plants, and ahead of schedule as far as the typhoon-proofing of the relevant cooling tower units are concerned. On debt management and FX exposure, bulk of the derivative transactions were entered into opportunistically late in 2015 and very minimal early in 2016. As everyone is aware, sentiment against the Philippine peso vis-a-vis the US dollar as we are turned negative as we approach the May 9 presidential elections. The expected weighted average of interest rate for 2016, together with the fact that 66% of total debt now being amortized, have all been reported during the call for our full year 2015 financial and operating results. On preserving the revenue base. For this, we remain in constant touch with existing customers whose contracts are up for expiration, and at the same time, opportunistically entering into discussions with new customers with gaps in their supply pipeline open for recontracting. This is our last slide, and we are now opening the floor for the Q&A session.
Thank you, sir. If you would like to ask a question at this time, please press the star or asterisk key followed by the digit 1 on your telephone. Please ensure that the mute function on your telephone is switched off to allow your signal to reach our equipment. If you find that your question has already been answered, you may remove yourself from the queue by pressing star 2. Again, please press star 1 to ask a question. We will pause for just a moment to allow everyone to signal. Our first question comes from Ajay Mirchandani of JP Morgan. Please go ahead.
Thank you. Thank you for the time. Two questions from me. One was just wanted to understand better, given that you still have a decent part of the overall portfolio exposed to spot. You have highlighted your problems with regards to Bacman, where you obviously are still awaiting the ERC approval. So my first question is, one is if you could give us an update specifically, when do you expect that ERC approval? Is that approval itself potentially at risk? If there's anything you can share with us on that. Number two, specifically in terms of the overall spot exposure, what is management targeting to bring it down to by the end of this year? And thirdly, and just lastly, on Tongonan, if you could just give us a sense of the incremental capacity number, if you could just remind us what will be the overall upgrade in the overall capacity in Tongonan for 16 and 17 post the retrofit. Thanks.
ERC approval, when do we expect?
for the ERC approval.
Yeah.
Hello?
Hello.
Hello?
AJ, can you hear us? Hello.
Yes, I can.
Okay. Hello. Hi, this is Arlene. For the ERC approval with Meralco, we're currently following it up with ERC. However, due to the reorganization of ERC with the new commissioner chair, we are anticipating that we may secure the ERC approval by late this year or perhaps early next year. And then for your second question regarding the spot market exposure of Bachmann, we are currently in negotiation with several contestable customers and electric cooperatives and distribution utilities, wherein we can start contract as early as December 26, 2016.
Terms of
Yeah, this is Dominic here, the head of the O&M. In terms of the incremental megawatt output of Tongonan, the original capacity from a gross standpoint is 37.5, and the guaranteed gross output that's being guaranteed by the OEM, the retrofit is being done by the OEM, which is Mitsubishi. It will go up from 37.5 gross to 41 megawatt gross, about 3.5 megawatt. That's a gross. Times 3 units, because we have 3 units there. So that's what we have for Tongonan upgrades or retrofit.
So if I got those numbers right, it's basically 3.5 megawatts per unit, which is times 3, which is around about 11 megawatts approximately.
more or less 10.5 megawatts. Yes, that's correct.
Yeah, but that's gross. So meaning if you have 41 times 3, that's a gross. You probably have to take out about 10 megawatt as your station load. So about 9 or 10, no?
No, but the incremental is 3.5.
But the incremental, yes.
3.5 times 3, so mga 10.5.
That's 10.5, yes.
10.5, AJ. Plus obviously,
And Irwin, just to specifically clarify on the spot market strategy in general, you did talk about it for Bachmann, but is that the only one we should be worried about? Because Nasulo, that I'm guessing is still going to remain purely on spot, just as backup for the rest of the portfolio. Is that correct?
Actually, for the rest of the uncontracted capacity under the portfolio, we're actually actively marketing it for a long-term power supply agreement, not just Bachmann. So that includes Nasulo as well as ULGEI.
And that's when you were mentioning about looking to target something by December for the strips as well as Nasulo? Or can we expect
yes.
something earlier?
Although we're also trying to look for potential customers wherein we can start contract as soon as possible.
Okay, thank you.
Ladies and gentlemen, as a reminder, to ask a question over the telephone, please press *1. There are currently no questions on the phone queue at the time. We have a pop-up question from Tony T. of Morgan Stanley. Please go ahead.
Hello.
Go ahead, please.
Hi. Thank you for your time. Just 2 follow-up questions from AJ. Just on the, I think firstly on the exposure, the exposure provided in the slides, I guess based on revenue, would you have a better sense of the exposure in terms of capacity or volumes, in terms of exposure to the spot market? And also on the last slide, you did mention on preserving the revenue base. Do you see any risk to, or any more possible renegotiations of your existing contracts?
Yeah. For the first question, with respect to capacity for 2016, about 16% is actually exposed to the spot market at the moment. Sorry, Tony, that's 16%. I don't know if you catch that.
Sorry, just to clarify, is it 16% of total capacity?
Yeah, in terms of megawatts, yes, it's about 16%.
Okay.
And then for your next question. Regarding the renegotiation.
Do you expect it?
Actually, as of now, we're not expecting any possible renegotiation with our customer.
Okay. And is the new rebase as of last year still 4.85?
Yes, the contracts that were renegotiated in 2014, if I'm not mistaken, are still outstanding. Yes, they still hold.
Okay. Thank you very much.
We will now take our next question from Gio De La Rosa of Deutsche Regions.
Hi, guys. I just wanted to ask, do you expect any significant maintenance shutdowns or maintenance shutdowns or for repairs or anything for any of your plants for the rest of the year?
Yeah, this is again Dominic here. There are, but just a caveat, the projected revenue that was presented earlier already takes into account all schedule outages that we have. So I think but there are, one is the Tungonan that has already been presented. I think it's a 58 days. That is the target. That's the complete rehabilitation of the unit and also control system integrations. I think there's two more, and these are the typical every 4 or 5 year major inspections we have, which is about 18 to 21 days. They've been planned, they've been scheduled, and they have been taken into account when we did our budget for last year. That's really what we have. So there's no surprises at the moment that we can think of. Does that answer your question?
So basically what you're saying is the revenues that you have recognized for the first quarter already reflect the proportionate share of the shutdowns for the rest of the year. Is that correct?
No, not yet. The Tungonan will be shut down 3Q.
3Q. The one in Tungonan will be shut down in October. So the impact of the reduction of the revenue of that unit that will be shut down in October has already been accounted for the year because it's a schedule out.
It's in your budget, but my question is it reflected as a proportionate reduction already in the first quarter, as it has been the case in the past?
That will have to be taken up when it happens in October.
Yeah, so it's in the budget in the fourth quarter, but it's not any proportion. It's not taken up in the first quarter, Gio.
Okay, thank you.
As a reminder, to ask a question, please press *1. There are no further questions in the phone queue at this time. Pardon, we have another 2 pop-up questions. We are going to take the next one. Calista Madbayo of Macquarie, please go ahead.
Hi, good afternoon. I just wanted to check how much of your revenues, how much of your contracted capacity have contracts that are expiring in this year and next year. So what percentage of your revenues are basically exposed to repricing?
Yeah. For this year, Carissa, there are no expiring contracts, no. So this year, about in terms of volume, about 16% is exposed, no. And then next year, around 75 megawatts are actually expiring. So that will increase the uncontracted, no, from 16% to 21%.
Okay, thank you.
We have a follow-up question from Joe De La Rosa of Deutsche Regis. Please go ahead.
Hi, sorry, just a follow-up. Actually, two follow-up questions. One is on the hydro. I was wondering how second quarter is looking like, or is there any expectation that the numbers for the second quarter will be good? Will be good or bad, considering considering El Nino essentially. So I'm not sure what water levels are at the hydro and how it is going to affect your output. The other question is on spot market prices. Demand has been exceptionally strong in the first quarter for this year. I was wondering what your thoughts are, why spot prices are low. Thank you.
So Jay, we'll ask our marketing team to respond to your question.
Hi, Joms here from marketing. In terms of your question on SG Hydro, for Q2, generally when it comes to this time of the year, we have lower irrigation requirement, and therefore we expect lower production.
Has the El Nino phenomenon actually affected that?
Actually, in terms of the production is mainly driven by the IDR, or the irrigation requirement, which is very seasonal in nature.
But I think generally the water levels in Pantabangan right now have been higher, compared to the previous years.
Yep.
But as our marketing mentioned, the generation of revenues is largely driven by irrigation requirements. So given that it's going to be rainy season in the third quarter, the expectation generally is that we'll have lower revenues now compared to at least the second quarter of this year. Gio. And then on the second question, why is the spot prices low? Yeah, given the high demand. What's driven the...
What period?
This year.
On the second question on spot market prices, in terms of the decrease in spot market price, it's mainly driven by the adequacy in supply. Year on year, the first quarter 2016 supply has increased compared to 2015 first quarter supply, mainly because of new baseload plants and variable renewable energy plants. So even though the demand has increased this year, it was offset by the supply being more available, leading to the lower spot market prices.
Thank you.
We are going to take the next follow-up question from Ajay Mishandani of JP Morgan. Please go ahead.
Thank you. Erwin, just to follow up, you mentioned that you expect spot exposure to increase by 75 megawatts into 2017. Can we just confirm which plant you are seeing expire?
GCGI. Yeah, this is GCGI, the Palimpinan-Tonganan contracts, AJ.
Hydro.
And also hydro.
So sorry, when I lost you there a bit. So hydro is one component, and also in GCGI, that's Green Core?
That's correct. Yes, hydro is about 25 megawatts, if I'm not mistaken. And then the balance is Palimpinan-Tonganan.
Okay. Okay, thank you.
And we have another follow-up question from Tony T. of Morgan Stanley. Please go ahead.
Hello. Hi. Thanks. Just one more question on the Western market. You did mention that it was also a function of higher baseload supply this year versus last year. Can you give us also your thoughts on the demand and supply of the plants in Philippines, and especially your view on the Western prices?
Demand supply in the Philippines?
The Philippines, and then the view on the spot prices.
Our view on Joms here, again from marketing. In terms of our view on the demand supply, since on the demand side, and since it is an election year, we have seen the demand has picked up. So, but on the other hand, on the supply, there are coal or baseload plants that are in the lineup and will be coming in this year. So if you, as was mentioned, if you consider that those two factors, and you use that for your price outlook, we have a base case WESM forecast for the end of year, which is
actually lower compared to the previous year.
Yeah.
So I think what our marketing team is saying is that essentially, I think in terms of peak demand, at least for Luzon, it has gone up from about 8,000 to about 9,000 megawatts, at least for this summer. So demand has gone up. But supply is also going up with some of the coal plants and some of the gas-fired plants that are coming online for this year. But because of that scenario, and again, because of lower commodity prices, particularly coal and oil, I think we're more bearish in terms of the WESM prices for this year compared to that of last year. No?
No, that's very clear. Thank you very much.
There are currently no further questions in the phone queue. As a final reminder, to ask a question at this time, please press star 1. I have a few questions just arrived. The next question comes from Benjo Berjardo of BPI Securities. Please go ahead.
Hello, good afternoon. Just one question from me. Just to clarify, your Palimpinan plant is also at the end of its design life, right? So are you also planning to have it retrofitted?
Again, O&M here. I think the answer is there is a plan to retrofit. It's more on the timing. However, even the retrofit really is more of instead of a like-by-like replacement, you're trying to get more megawatt on an older unit, primarily because, it has better design now compared to 30 years ago. So to answer your question, whether we do a retrofit or not, there is a plan to continually maintain these plants, replace them if we have to. The issue on whether we do an upgrade or not is continually being reviewed, primarily for a number of factors. But if the business case will make sense, obviously we'll do the same thing as Tongonan, meaning do an upgrade. But if it's not, we will go ahead and replace it the same as what we've done on the other units, where we will replace the rotors as the end of design life comes and replace it with a like-by-like design.
Okay, thank you.
The next question comes from Tien Do, GIC Singapore. Please go ahead.
Hi, everyone. Thanks very much for the call. Could you just give me an update now on your solar and wind expansion And the curtailment issues for the wind side, those are all over now, aren't they?
Hi, Ken, this is Erwin. With respect to the solar and wind expansion, for the wind, what we're doing now is actually secure some of our concessions, but we haven't really formally broken ground. We're in the process of firming up the potentials of these sites. No? So usually micrositing and all that are being done as of the moment. As for the solar, we are in the process of still securing some of the right of way in some areas, as well as looking at rooftop solar, as far as potential businesses going forward. But as of the moment, with respect to the large scale solar and wind, we haven't been moving, mainly because of we're waiting for the outlook from the new administration as far as their policies on the feed-in tariff.
Right. The new administration, I presume, hasn't said anything yet, or in the run-up to the elections, on what they're thinking on solar and wind FITs?
Yeah, they haven't really firmed up. No, I mean, as a policy with respect to what views that they will take going forward. No, and I guess right now it's on a wait and see. Especially, for example, as you're aware, in the solar space, there were capacities that were actually built in anticipation of actually getting into the 500 megawatts cut, but we understand that not everyone actually made it. So it's still a question on how those stranded assets should be taken care of. So that's a big question.
All right. And now there are no curtailment issues with Burgos Wind?
None. It's been solved since fourth quarter.
All right. Thank you.
There are currently no questions in the phone queue.
I think, Operator, there being no other questions, well, I'd like to take the opportunity to thank everybody who has dialed in for today's call. As I said earlier on in the introduction of the call, we are subscribing to a playback, and the corresponding codes will be provided upon request. Okay, thank you very much and good afternoon.
Thank you. That will conclude the Energy Development Corporation's call on the first quarter 2016 financial and operating results. Thank you for your participation. You may now disconnect.